Which is a better investment, real estate or the stock market? Over the years, we've had the same debates on which brings more returns. However, much like anything else, they both have their fair share of advantages and disadvantages. Furthermore, each is unique and they both have potential to give you a huge sum of money if you do things right. To succeed in either of these investments, you need to understand the pros and cons of both. Hey, welcome to Stock Market Mate. In today's video, we'll talk about which is a better investment, real estate or the stock market. Before we get into it, make sure to subscribe to the channel and hit that notification bell to help us beat the YouTube algorithm. If you're done with that, then let's get right into it. Real estate. Unlike stocks, you actually have influence on this type of investment. You can touch it physically since it is a tangible good. Plenty of investors like the assurance that this investment provides because it feels real. For many years, real estate investment has provided consistent wealth and long-term appreciation for many investors. The rate of your returns all depends on where your real estate is located. Generally, there are two major types of real estate, commercial and residential. However, plenty more types exist, namely mobile home parks, strip malls, apartment buildings, office buildings, storefronts, and single-family homes. But they're actually under the two main categories mentioned earlier. It is common knowledge that choosing real estate as an investment isn't a cut-and-dry job. It demands tasks like home flipping, wherein you search for a distressed property, refurbish it, and sell them for a profit at a greater market value. You can also opt to find properties to rent in order to generate a consistent income. Usually, there is a required 20% down payment based on the actual purchase price, and the rest can be paid through a mortgage. So here are the advantages of investing in real estate. Investing in real estate means that you're opening yourself up to plenty of tax benefits. You can write off your mortgage interests and get tax deduction, wherein you can sell the property through a 1031 exchange. In the world of real estate investment, a 1031 exchange is a swap of one investment property for another that allows capital gains taxes to be deferred. This means that as long as your money is invested into a similar property type, you wouldn't need to pay capital gains. Another advantage would be building equity for the future. You're slowly building equity as you pay for your mortgage loan or when the home's property value increases. When you sell the property for a profit, this taps the equity in a cash-out refinance or home equity line of credit. You can even choose to leverage it to purchase another property and use it to expand or grow your portfolio. Next, you're getting protection during inflation and you get a steady cash flow. Other investments don't give you much hedge against inflation, but investing in real estate can cater to that. As the value of the dollar lowers and price increases, the cash flow you get from your property rises along with it. By that, you're keeping pace with inflation. Furthermore, investing in real estate also gives you a consistent and reliable income. This is also a particularly great investment opportunity for those who are planning to retire. And now to the disadvantages of investing in real estate. All investments have their own sets of drawbacks, and real estate isn't an exception. This type of investment is illiquid because when you buy a property, you can't sell it right away. It's ideal to hold the said property for a few years until you see its true profit potential. Furthermore, you might have to spend thousands of dollars on closing costs that include commissions, taxes, and fees. In addition to this, diversification is a challenge when you invest in real estate. But diversification is still possible if you have different types of properties and you don't focus on the same community. With that in mind, by using real estate investment trusts or REITs, you can also expand your diversification strategies. Though honestly, in terms of diversification, stocks have the upper hand. This is because you're allowed to own plenty of different companies across an entire economy. Now let's talk about stocks. If you use the S&P 500 as a benchmark to present how stocks have performed throughout the years, you'll see that from 1970 to 2016, the stock market has had an average annual rate of return of 10.31%. We assume that you already know the basics of how stocks work. In essence, you receive ownership in a company. When times are good, then you will get good profit. However, the problem lies in the fact that economic challenges will diminish funds, as the earnings of the companies you've invested in drops. Compared to real estate, you can get a higher rate in stocks if you take the long-term approach and you do it with balance. In terms of leverage, stocks also allow you to utilize the market to increase the overall amount of shares that you own. However, if the stock position falls, you'll get a margin call. This is when the equity has depleted below a specific level and money must be added to your account to bring that amount back up. If you fail to comply, then your brokerage firm can choose to sell the stock to raise the amount loaned to you. As you see, it also has its own pros and cons, and we'll discuss that now. First, let's talk about the advantage of stocks. Unlike real estate, stocks are quick and easy to sell. They're also very liquid and flexible. In fact, you can even reallocate it into a retirement account, tax-free. That is, until you start withdrawing the money. Other than that, a huge benefit of investing in stocks is that you get tons of investment gains. The stock market gives you a chance to grow your money. It gradually rises in value, and if you invest in a stable company, then you'll make a very significant profit. Furthermore, some stocks also pay in forms of dividends. Not every stock offers this, of course, but when it does, investors receive annual payments. Lastly, and probably the best part, is that you get to diversify your portfolio. Unlike investing in real estate, with stocks, you can invest in multiple types of companies. While stocks do provide risk to your portfolio, it also welcomes large rapid gains that can make you a millionaire. There are also lesser transaction fees with stocks. Compared to real estate, you do need a brokerage account in order for you to buy and sell stocks. However, plenty of discount brokers have decreased stock trading costs to $0, and they even offer a selection of no transaction fee mutual funds, index funds, and ETFs. Also, plenty of stocks considerably perform better than real estate. Some stocks can grow for about 20 to 50% in 1 year. Now let's talk about the disadvantages of stocks. Needless to say, stocks are extremely volatile. When the economy is struggling, prices become erratic. They can rise and fall quickly, often in relation to a company's policy, in which investors have to control over. Some might even say that the volatility is stomach-churning, unless you look at your investment as a whole. Also, stocks are emotional investments. Most of the time, your decision can often be irrational and are driven with much anxiety. Lastly, bankruptcy will always be a possibility. Any active investor already had this event at the back of their mind when they first invested in stocks. You should also acknowledge the fact that your investments can dissolve in a snap. Now that we've seen the ups and downs of real estate and the stock market, we eventually have to answer our initial question. Where should you invest? The answer is, it depends. If you're keen on passive income, then real estate is your choice. But if you're aiming for higher returns, then the stock market is the best option. It all boils down to preference. You should also choose the investment that interests you. Also, consider where you live, because that also plays a huge role in the success of your investments. Simply, you have to draw your own conclusions based on your circumstances. But who said that you can only pick one investment? This might not be an option that all you have considered, but it is highly possible to invest in both real estate and the stock market. Simply build your stock portfolio early on, and then turn to real estate later in life. With this, you get the best of both worlds and your assets are diversified. And that's about it for today's video. Which do you think is a better investment? Real estate or the stock market? Let us know in the comments below. And if you enjoyed today's content, consider subscribing to our channel for more. Thanks for watching, and we'll see you on the next one. If you enjoyed this video, you're going to want to watch one of these two videos right here. Enjoy!